Hey everybody, Kimberly is on the road. So, Pat, John, welcome. All right, we have 30 minutes of awesome. What's on tap? Did the politicians play Let's Make a Deal or did they play No Deal? Looks like it's all up in the air still. The market reacting negatively today. We popped on the potential, but we kind of pulling back all day on the Republicans out there beating the drum saying that they weren't going to play Let's Make a Deal. I don't know. Indications are we may see a big pullback no matter what happens. We'll go through the charts and talk about it. And of course, we have 30 minutes of your requests, as always, coming up at 5 p.m. here in just about 30 seconds. So if you are brand new to this thing, 30 minutes of awesome right here, make sure you hit the subscribe button so you can chat while we're live. We'll probably be live for, we've been going for over an hour the last several weeks. So if you want to chat, you want to make requests, make sure you're a subscriber. Hit the subscribe button down below. While you're at it, you might as well hit the alert little bell icon with the doodads. Turn it on to all alerts so you get notified when I go live tomorrow morning before the market opens to talk about what's moving for the day tomorrow. This one right here is generally just a big your request type of deal where I go through tons and tons and tons of charts and give you kind of a high level outlook. What do I expect the market to do over the next week or so? Any questions? Make sure you hit me in the chat during the live stream. And if you're watching a replay, leave a comment below. I'll get back to you just as soon as I can. I'm not always Johnny on the spot necessarily, but I try to answer all the comments, especially questions. Alrighty. Hey, Dad. Karen must be driving. Kimberly passing along. Welcome everybody. All right, it is after 5 o'clock, and let's kind of pull this over and talk about how my week went last week. So right here we have Kimberly's dad, my father-in-law. We were panning for gold back there a few months ago. That was the one thing he wanted to do, was go on a gold panning trip with me. I had to buy some ore, and we just panned in his driveway there. And of course, if you're new here, her dad passed away about 3 weeks ago, and we buried him out at Fort Bliss in El Paso. It was a beautiful thing they did there, putting flags on every grave for Memorial Day. Really beautiful sight to see. 60 some odd acres of headstones of our great Americans who gave all their life, or at least part of their life, to defending this great country. Really was a cool sight out there, looking at all those graves, all of them lined up, all the flags. Every which way you turned your head, it was amazing. My youngest said it was just beautiful. So then the trip home, beautiful sunset, coming back east, and we saw these cool lightning in the clouds, little fireworks show on the way home. That was pretty cool. I just thought I'd show that off just because that was pretty darn neat. So we flipped my head out of the way here. Oh yeah, that was pretty cool on the way home. Just riding on, riding along. So yeah. Anyway, couple danger close situation here. We have net long in futures. I talked about that this morning. We're going net long here. So these are the CTAs. This is from the CFTC, asset managers, leveraged funds, and CTAs. We're seeing that action right there going net long. Now, we can sustain a net long for a little while, but usually when we do, the market rolls over. They went net short here. We started going down. They went net long, and we continued down. And we popped, and we continued down into the net shorts, and then we've been rallying. Now, when they go net long, I'm cautious. All right, we can, as I said, we can hold it for a number of months, but at some point, it's going to roll over. All right. See you, Kimberly. Hope you make it home here in a couple hours. All right. Also, U.S. net speculative positioning on the 2, 5, and 10-year treasuries. I talked about this morning. We'll actually go through some of these treasuries and the futures for the treasuries here this evening. These are the most short they've been in over 23 years. That's kind of a big red caution to me. Usually we see a fast reversal on treasuries when we go super negative. I mean, super negative used to be just kind of like barely touching negative and we would shoot off, but these are massively negative right now, indicating that either there's a fundamental flaw in the treasury system or some people about to get ripped. So we'll see which way that goes. We'll look at some charts. Now, also we have the biggest outperformance on the S&P 500 versus the equal weighted S&P 500 that we have seen since 1999. That's 24 years. That's almost 25. That's almost a quarter decade right there. We've seen relatively low outperformance on the S&P versus the equal weighted S&P. And right now, getting huge outperformance that is not typical compared to the last 25 years. So cautious. We only saw this little 5-year period right here of outperformance, this little bitty baby 4-year period right here compared to what we have right now. What does that mean? Well, it means we could see a pullback. I mean, these are all signs that we could start seeing outperformance of the S&P 500 versus to the downside versus the equal weighted S&P. It means our equal weighted, as they say, like most of the performance is in like 6 names on the S&P 500, and the other 494 are just kind of laggards. We'll see. Yeah, we can look at soybean futures. Just give me a minute. We'll catch up to you here in just a second. So gross domestic income also coming in low and negative for several quarters now. This is, everybody talks about gross domestic product, and that, that used to be the measure for a recession. We saw 2 negative quarters last year, and then, of course, everybody says, hey, we're going to redefine that. We're not going to call that a recession. Well, guess what? Gross domestic income, the thing you and I get paid in and we spend, negative for 2 consecutive quarters, and we've had some negative other quarters in here too. So I'm cautious that, the real numbers here are showing that we're pretty much having this recession thing, whether they want to admit it or not. Whether it shows up in the actual companies and the jobs and whatever measure that Jerome Powell wants to call. I don't care. We're basically doing the recession. We're probably most of the way done, if not done. And I see in news today. I didn't bring that news up, but we're also having some news today that companies like Walmart, Target, all that, not sitting on the huge inventories that they had been for months, and potentially seeing the end of that coming up very soon. All right, moving on. I have another chart I want to, I have 2 more things I want to pull up before I get to that chart right there. Let's pull this up and pull this up. Let's talk about this really quickly. Right here, AI mania melt up accelerates, but bonds, bullion, and Bitcoin jump. So the mania of AI still going crazy here in the U.S. And NVIDIA get a little pullback. AI blasting off. Soared 30% today ahead of its earnings tomorrow. Is this something happening, or is this actually a massive gamma squeeze of the shorts? Massive extreme short dated option, positive delta flow. We're seeing outsized flow compared to the actual stock price move. So be careful. That can just be another bubbly squeeze on AI despite the giant move up. All right. Gamma squeezes is one of those things I usually try to keep my eye on, but lately I've just not had the energy to try to fight them in the face of the market just churning. So a lot of them haven't worked in the recent months, but this one may be one playing out right here. Be careful. This thing can come down just as fast as it went up. Sometimes even faster. All right. Please be careful. Also, Nasdaq rolling over a little bit, as I said, and just be careful. This AI play is going to give up. It's going to run its course. We're going to come back to reality a little bit. You know, crude oil tumbling down. We're going to talk about that. I started a crude oil short trade today. Probably going to extend lower. Gold bouncing back up. Hit the roadmap line on the low time frames, but still looks like it needs to reach down one more time to get to the roadmap line on the daily chart. And then Russell also just trying to churning in the lows. Not awesome. And then let's talk about why everything's so hyped up on these things, right? So this is super micro. It's like SMCI or something like that is the ticker. Their chart's like straight up. We can look at that too. But you buy these GPU systems right here. All right, these are the kind of computers you buy to do AI models. All right. These things are crazy expensive too. Like 4-unit, 5-unit GPU. Look at all the GPUs in here. These are rack units, not number of GPU units. And if we click like, let's just go ahead and look at one of these that has a crazy number of GPUs in here. And let's see, that one has 4 GPUs. Buy now. Let's see what it is. I didn't play with this beforehand, so let's see what they got here. Yeah, you got some Xeons, Intel's, put some memory in it, and hard drives, NVMe's, GPUs. Let's go with a few of these awesome deals. Let's see, Quadros, A30s, A100s. These are the bad boys right here that everybody wants to run. Let's go. Let's throw a few of those in there. 4 of them, and $64,000 price right there. Nice. And those are like $20,000 GPUs right there. Let me remove those off. Let's see. One of them. Update 35,000. 20,000. There we go. None of them. Drop the price back down to 7,000. So base price 7,000. We add one in. We add in. No, I don't want to chat with you. Yeah, 21,000. So we add 3 more. Get up to about 35,000. So 64,000. Yeah. Yeah, like, so those are, you know, I guess $15,000 each, or roughly. I mean, $14,000 each. That's why you know, some of these models need 1,000 of these bad boys. That's why Nvidia's stock price is up like crazy. All right, it's on the hype of selling these bad boys right here, these A100s. Any questions? So that's why Supermicro's up too, because they're making a hefty margin on these things. You know, if you don't have some AI computers running, you know, you're falling behind the times here. So they have some GPU systems that I don't know. Some of these things are crazy. These systems that they have. So like I said, they have, you know, some of these servers and machines have tons of GPUs in them, and it's crazy money. That's all. That's the best way I could put it. Crazy money invested in that. So, how many GPUs can Nvidia pump out? That's the question here, also. And eventually, though, this is going to run its course, and Nvidia is going to retrace. Supermicro is going to retrace. So please, please, please be careful chasing these things. All right. And these are some, as I say, mega expensive units. I mean, that looks like almost like my desktop there, and you could be spending $64,000 on that thing. So it's craziness. And these are some small. These are small ones. You know, these ones that GPU, you can put 6 GPUs in that one. They got ones that you can put even more. So yeah, there you go. 10 GPUs in that bad boy. I just want to see the price at this point. If we load this puppy up with 10 GPUs, let's see. Get 10 A100s in there. Let's see, RTX A4000, A5000, A6000. Oh, that one's actually, I bet that one costs more. It's not even, you can't even get it. Won't let me add it. Out of stock. Oh, here we go. Here we go. Here we go. There's 10 of that one. What's the price going to be? 31,000. Oh, that's not too bad. Let's try this one. There we go. I can add it to the cart now. What we got? What we got? 56,000. Not too bad. I think the A100s are the popular ones. Let's add that one to the cart. It's $14,000 GPU. I mean, $140,000 probably. Let's see. Update. Yeah, 151,000. Whew. That's a pricey little sucker. And then you buy, say you buy 10 of those. I mean, like $1.5 million. Maybe you need 1,000 of them. Like $15 million right there. That's why Supermicro rocking it there. So, all right, moving it on. Now, warning: we are coming into June. June starts in just a couple days. Volatility on Nasdaq is historically, this is looking at the last 20 years, historically we see volatility in June. This looks like what we're doing, kind of coming up right into June. We may start getting some chop, so be careful, be ready for that, all right? Also, S&P, usually we see it squeak out. I mean, this is kind of what it's doing, right? Squeaking out a little higher, a little higher, a little higher, and then we get some volatility. So watch out for the volatility potential coming up in later June. VIX seasonality, usually we get a spike into that second week of June and then into the fourth week of June. So right now we're kind of sitting potentially in a low volatility. We may quickly ramp up to a high volatility. This is VIX, implied volatility on the S&P 500. All right, that's the warnings. All right, now looking at the charts. Today, I thought we were going to break on out. That was the 4, but no, we went for a deeper 4, which makes more sense. Actually, on this 1 hour chart, we came up just a bit shy of the roadmap line. That dashed line is the roadmap line on this chart. And that puts the potential for wave 5 up here around 4260, possibly as high as 4270. Maybe a super extension out to 4300. We could get that. That could happen, but much more likely is to stop right around 4260 area. 4250, 4260. So, or about where I put the oval. S&P 500. The 3-day chart, nothing really changed. We're still kind of edging up here. I don't really want to see it stop right in this zone right here. We don't really want to stop right there at the 42, 47. That would be not so awesome. If we stop right there and roll over, not awesome. That's probably not going to be the super bullish pattern that I was looking for. If we just stop at like 42, 47 on SPX. Now, if we get up to 43, 27, 25-ish, you know, this red line, this purple line, that's better. I would really like to see it up here, but then I'm cautious because a whole different pattern kicks in too. So multiple layers of super caution right now, mainly because we dipped right here and just came straight up and haven't done any meaningful pullback like these since then. We just keep inching up higher. If we can do a pullback and then go for an extension, that makes me feel a lot better. But right now, we haven't done that, and it gives me caution. I just want to, throw that whole big picture kind of thing out there and let you know. All right. So let me catch up with the chat here. I've just been blabbing for a minute. So, let's see. Long-term treasury bonds. Yeah, we'll talk about treasuries here in just a second. All right, but first, before I talk about trades, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap. This presentation here intended to be informational, educational, and fun, and is not a recommendation to buy or sell any financial instrument. Despite anything I may say, then maybe a good idea, or otherwise, I'm not recommending you do anything. And if you desire personal financial advice, you need to consult. You need to hire first, and then consult a financial advisor that has a fiduciary duty to give you advice based on your financial situation. So, all right. All that said, let's kind of cover where we're at. ES tried to pop and retrace right back. Makes sense. I mean, it really does. Like, we tried to break out. We've tried to break out so many times, tried to break out and had to retrace right back to the tops. Just makes too much sense. You know, now we can, if we can hold right in here, we may push higher up to the next level. But right now, I'm not so sure. This is more sideways, more choppy sideways crap. We made a higher high, but more choppy sideways crap. It's just going to struggle until we actually get a sizable pullback. Now, you may say, JT, what is ES? ES is the S&P 500's futures. I use these because it doesn't leave gaps in the charts. Now, Nasdaq here, that candle looks like the wrong color, doesn't it? I mean, pop, and it's red sticking up there. It looks like it should be a green doji, but it's a red doji type thing sitting up there. There's a little beacon on the top. We can pull back from there, or we can extend. The higher we do extend, the more cautious I am. This is getting a little extended here. It does look like we need a little bit of pullback before we can get the ultimate high. Maybe up there around 15.2. Now 15.2 comes from the high we made all the way back here in April last year. You know, we're way above the August. Now there are some laggards though, like Amazon is being a laggard. We are nowhere near the August high, let alone the April high. March, April. This thing has a long way to go to catch up, and it may outperform. I mean, think about it. All they would need to do is go, hey, we're starting an AI initiative. Like, we have this brand new program, and we bought a crap load of GPUs from Supermicro, and you could only imagine what would happen there. So, be careful. That's what I got to say. Russell, churning in the box down here. Just churning. Not really participating. Not showing any signs of anything. Usually this thing leads. Right now, it's kind of lagging. So, cautious there. Oil looks like it wants to dip. And like I said, I actually bought some calls on SCO, expecting this thing to drop on down a bit more. Probably going to hit 67. If 67 doesn't hold, actually the zone goes down, the zone of support. Let's kind of draw this in right here. It goes down to 66. And then if we break through that, probably get an extension down to this, say 59 to 60 area at the minimum, possibly as low as 57. We're going to see in the coming days. This didn't look bullish and didn't look done, and is now retracing. We could make a lower low than what we saw right back here at the beginning of May. Gold, like I said, little pop today, back up to that consolidation. Came up short. Looks like it wants to reach just a little bit lower. Get that, tag that right there. So we'll see what happens on the debt ceiling deal and debate and all that stuff. Bitcoin popping up, finding resistance at the top of the box. I am and was hopeful that we would see an extension. So far that has not manifested. And yeah, there we go. If you pulled up just the bodies from over here, we just kind of popped up to the top and sat there. Let's see if we can break out. That would be really awesome to see on Bitcoin, to break out and run up to 3,200. That would be constructive per price, although we did come up short of actually touching the daily roadmap line down here. Ethereum also coming up a little shy of hitting the actual daily roadmap line. Now, as I said, we cover some other things like soybeans and corn and whatnot. So one of my favorite charts right here is silver, potentially bouncing off the roadmap line, but not yet. It hasn't bounced yet. Don't buy falling knives, all right? This is not a garbage chart, but it is not a positive chart until we break back above a prior high. Right now, this little pop was not it. SLV has a couple green days, but again, it is not breaking above the prior high right here. That would be an aggressive entry right here. More conservatively on this gap fill right up here. All right. This trade has large potential, large potential, possibly up into the 30s, maybe even up into the $35 area if it gets going. Right now, it's not going. So please be careful. Don't jump that early. All right. Please be careful. I'm showing it to you, but it's not ready yet. All right. Copper continues its decline. Probably going to drop on down. And that's not a bullish chart. And poking below these lows is not positive for higher prices on copper. Wheat continues to this march into the garbage here. This thing going to retrace this whole big pop. You know, when I say bubbles and pops, like look at that. That was a pop, and this is going to come all the way back down now. Corn also just kind of churning here. Not seeing major price action. Going higher. These looks like it's probably going to correct on down. This was a large pop from back here in 2020, and we can see this retrace. I don't care, you know, what the narrative is. This looks like it wants to retrace further. Sugar, that's very bubbly looking too. Probably going to retrace back down here to around 20 at some point. Lean hogs, lean cattle, excuse me. Large gap down and probably wants to get a retrace. Now that's almost a head and shoulders type situation. Can lead to a bigger type of retrace here if this actually continues to play out. If we see it play out, that thing could pop right back down that distance from the neckline. Look at that, getting real close to the target I drew on here. Be careful, all right? Soybeans, and that one also looks like a giant head and shoulders. Although it looks more like a head, shoulder. Cautious. We can definitely extend lower. That's getting in, like, if we don't hold right here, it's probably going down to what is that, 151, 1051, 1055. Yeah. Probably going down here, if not down to 856. All right, I said we talk about T-bonds. Check these out. This is T-bond futures. This is actually potentially showing somewhat of a reversal. This still looks like garbage. Could still extend lower. But this is starting to look a little bit like we could see a reversal here. Holding higher lows. A breakout above about this 134 level. Could see a rapid price appreciation. Probably have resistance right here at this prior high. But a breakout over that could take it right back up very quickly. And then ZT, 2-year note, treasuries, also looking quite extended. Could push down one more time. Could see this extend one more time lower. Starting to look extended though. 5-year notes, that's working on higher lows. A breakout above these highs here could lead it up very quickly. And ZN 10-year notes, higher lows again. That's very similar to the 5-year notes. So I'm cautious. We can see a reversal here. And then Ultra US Treasury Bond futures right here. This has been going sideways. A breakout through above this little consolidation zone. Could see it pop very, very quickly. Alrighty. Yeah. All the futures markets have premium pricing. Yeah, it's interesting how everything's really premium. You know, everybody's talking about the commodity super cycle kicking off, but a lot of those commodities look like they're about to cycle right back down. So very cautious to me. So very, very cautious. All right. And, you know, I'm sure we got some coffee drinkers in here. Coffee, that's been beaten down since 2022 and looks like it's probably going to continue on down. I mean, that's looking pretty rough. It is a little bit of higher lows and lower highs, but that's kind of a diagonal, and would not surprise me to see that extend down one more time. Probably somewhere down around 125, 80 a bag or whatever, that 100-pound bag. I think that's what they come in for coffee C futures. Alrighty. May I remind you that the interest rates are still churning here. We're actually seeing an increase in the 2-year constant treasury rate, catching back up to the rates that the Fed funds have set. Orange line in Fed funds rate is the orange line, and the blue line is the 2-year treasury constant maturity rate. We've gotten the cross, but if they cross back, that can just be a little hiccup and we go higher. I kind of speculated that we may see a little sideways choppy action here, and then the 2-year treasury start running again, and that looks like it may play out. So keep it in mind. All right, now moving on to 30 minutes of your requests. Now that I've kind of hit the highlights here. FTNT looks like that one could actually break out of this giant consolidation here. That's a long based on this long-term chart, and it could be well into 2024 before we start getting highs at 82, possibly 93. That would be one that you got to commit to it long-term here. And then LYV. I'm sorry if I missed some of your chat. Looks like I got them all though. LYV, Live Nation, looks like a garbage chart. Remember what I keep saying, week after week, day after day, live stream after live stream. While it is potentially getting a higher high here, this looks like a garbage chart. It's not necessarily a garbage company. It's not necessarily a garbage anything, but it looks like a garbage chart, a garbage pattern right now, coming off the lowest low and making a higher high. That's kind of a megaphone. It's opposite of a watermelon seed squeeze, but it is also an unpredictable pattern. All right, the watermelon seed squeeze squeezes it into a tighter range. The megaphone kind of thing goes into a wider pattern, but also highly unpredictable. And this right here is likely to come back down, make a lower low. And then once it gets done doing that, it's likely to make an extension lower because this is kind of a corrective pattern. And this is, the trend has been down. This is making a corrective pattern, and the trend continuation will be down. All right. NVIDIA is right up there near some crazy levels, and probably as exponential moves go, likely to retrace at some point here in the not too distant future. Now 4060 is my ultimate kind of target right now, and I don't expect much more than 4060 right now before we get a mega retrace right back down to the roadmap line, which is hanging out all the way down here around 230 right now. That would be an ouch type of move, right? 170 point down. You say, JT, that's not possible. NVIDIA, you just, explained how they're selling $20,000 GPUs. Look at the move right here. Exponential type move. Look at that. 130 points down here. 196 points all the way to the lows. That was 241 points. Did a 241 point correction from here right down to here. Retracing 170 points could be nothing. All right. Be careful. Don't chase that sucker. That's exponential. You got in down here at 150. Great. Got in up here at 400. No. Don't do that. All right. So, Mara just stuck on the roadmap line. Need it to break out. Need it to do something. Just do something. Reminds me of that cartoon with the stick. Just do something. Bitcoin potentially going to move up off the lows. This one probably going to see squeeze. This is one of the most shorted companies in the world, and it may do this sort of thing. Now look, it's almost up at the target. First target 46, second target 54, and then probably going to come back again. Yep. So Mara has the potential to go super squeeze right now. Not breaking down, not breaking out, just continues sideways. I would like to see a little action on there though. I really would. All right, Amazon kind of went through that. Has potential to outperform and get back to at least back to the August highs. Come on. It's another one. Get the stick. Do the thing. Come on. Do it. Yeah. Huge opportunity to catch up on that one. BITO. Just kind of doing what Bitcoin's doing. Popping above the recent support. What's interesting here, though, unlike Bitcoin, let me pop Bitcoin back up here. Bitcoin kind of sitting in this consolidation where we consolidated back here in March, but BITO, we consolidated in March up here, so this one's actually underperforming a little bit. Showing a little bit of underperformance. It's interesting. Is that because of the cost to maintain this, or is it artificially being suppressed for some reason? I don't know. Anyway, the chart pattern looks positive for the move out to 20. Nothing's really changed. Nothing. I mean, this is long-term stuff here. All right. BIYO. Not a symbol. Sorry, Richard. Crocs. Thoughts on Crocs? Looks like a correction. Nothing to do. Most aggressively, you could potentially enter when it breaks back above this junk right here. That would be an aggressive entry. We get up through that. It does have resistance right here where it gapped down from. And I would be cautious, but if we got up through that, then 164, potentially 182 on the upside. Otherwise, primary expectation until these things happen, more of that. Sideways. And let's see, coming on down. Coin. Just churning right below the roadmap line, being held in. Roadmap line providing resistance to going higher. And that big blue sideways arrow is my primary expectation. This does have a potential measured bounce set up in here, but we got to get up through the roadmap line to get the continuation. And that plays out. Wonder why it's not drawn on here. But that one plays out roughly right up in this zone at the top of that arrow. That's why that arrow is there. Plays out right in that zone right there. Right around 72 to 76. Then probably get another pullback. Another extension. Retest these highs. Does it have to play out? No, it doesn't have to play out. That's a potential setup. And I'm long with some January 2024 options. Looking for that to play out. You know, I got time, as they say. Alrighty. A, B, and B. Looks like, okay, this is one of those garbage things right here. Right now, you found resistance and went lower, lowest lows. And that's a garbage setup right now. There's nothing there to trade. This is like, if you buy this right now, you're just trying to catch a falling knife. This thing can retrace deeper. Can. I mean, it's sitting at the potential for a measured bounce. But until it breaks above the roadmap line, this high right here, until it breaks above that level, right in there, at this point, till we get above that, probably not going to do anything. And remove these off. It already did all that. And then we have more resistance right up there and more resistance right up there. So lots of levels of resistance built up at this point. You can see once, twice, probably 3 times, and retrace right back to the roadmap line before it can break up through. So that one highly likely to just do more sideways crap. For now, I see no opportunity there for me. Love, another garbage chart going lower. Don't trade garbage. Not garbage companies, garbage charts. This is a garbage chart going lower, and 29 doesn't have a long way to go to 0, so not huge opportunity. If this was like 300, had this chart, I'd say, you know, there's potential to go short. But this doesn't have potential to make a ton of money going on down. I mean, sure you could, but it's not huge potential. I like huge potential, not just chasing garbage. So BXP looks like another garbage chart going lower. Everything I just said about love continues on this one. How low can she go? Could find support here, but probably going to go on down to 33.50. More than likely. Alrighty. Yeah, 170 Amazon's the old split high. Yeah, I vote. Let's go. All right. My rationale for buying calls early, I just, I'd rather be early than chase something. Now, there's plenty of times where I make poor decisions and my trade goes to zero. And if I had just waited and bought later, then I would have made money. But sometimes I start doubting it later on and then decide never get in the trade. So if I find one set up like I like, then I'll just get it. That's for me. Now, rationale for buying something like this on a drop, I wouldn't. Like that's no kind of support right there. I mean, that's showing that it's likely to go on down. So I wouldn't do that one. Amazon's a classic one that I got in early. I saw this measured bounce set up back here. I went out to June and July and bought some calls, and they're just kind of sitting at break even right now because I need this thing to continue up in a big way. And I may go out to 2024, 2025 and buy a synthetic position and play that one on moving higher, catching up. So I don't know. We each make our own decisions. We're all individual traders, So TLT. That could be a higher low. I don't know. Until we break above the roadmap line, there's just more sideways. That's that's why I drew a big orange box and a big sideways arrow. That's what I kind of expect. Till we can break out. Potential for it to go, but it just doesn't show that it's doing anything right now. All right. So we could spike the T-bonds with the debt deal, but I don't know. I don't know. S-Bucks. Ouch. Probably, if it doesn't hold on to these lows, that's support. We get below support, we can extend. How low can she go? Next support will be right down here, about 92. You can see we pull this on over. Look at that. Breakthrough there, probably going on down here, if not down to 86. 86 was kind of the top end of this long-term consolidation over here on the way up. All right. Nike, NKE, Nike. Well, probably going for 103. Next up, WSM. Maybe like, JT, why don't you pick like reversal points? I just gave you the reversal point on Nike. It's lower. Williams-Sonoma, more sideways crap. This is still holding onto the roadmap line, drifting toward the bottom of the box. If we break out of the bottom box, it can extend lower quite easily. But right now, just more sideways. Like I drew this big arrow over here. Probably have to extend my box. More sideways. OXY should be going down. Looks like it has been. I don't know what your question is. Looks like it's been going down. This was like the Warren Buffett hype over here, and it's been doing nothing ever since. That's like people fading Warren Buffett. He's gonna wait this out, and then it'll take off, and he'll make $1 bajillion. So everybody will be like, I stayed in it until I got stopped out, and then it went up like crazy. That's just the way it always happens. So, yeah. NVIDIA, Mara, CRE. Are you just talking about commercial real estate? Yeah, BXP. Yeah. And then XLY. It's just stuck. Like, it's got this high right here, holding it in, and likely to get another retrace. Then just turning sideways till it can break out. Tesla hadn't been looking. I mean, Tesla was popping early, kind of just sat there all day, didn't really go anywhere. It held up really well in the face of everything else kind of pulling back, but it didn't make a higher high. It potentially broke out of the downtrend there, but it did not make a higher high. Makes a higher high than here, then we got to beat this one, and then we're probably going to come up and test this up here around 240, 250. What is this? This comes from the big downtrend of highs all the way back to 2021. Down, 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 down. It's just part of the big tech correction, not unlike Amazon. And the August high way up here around 300, 312. That one still has a large way to go. You know, also another one like Amazon with potential to catch up, but it does have the bigger downtrend to contend with before it can catch up. Whereas Amazon, not quite in that same boat. Like, it already broke out of the downtrend. At least the more immediate, super bearish downtrend. And more, yeah, it broke out of that one too. So, Amazon's already broken out of its downtrend, but Tesla has not. So, yeah. So, OXY, you know, Warren Buffett's just going to sit everybody out. Like, this is nothing for him. Like, okay, so what? Not do anything. I bought for 10 years. I didn't buy for, 6 months, 12 months, whatever. He's in this for like 10, 15 years probably. Eventually, it'll probably break out and go. Right now, it's just going to turn sideways. So, then XLV looks like it's going down. My extension target down here at 111 from 126. Just sideways crap and probably going down. And then AND is just kind of churning sideways. And TSEM looks like a garbage chart going down lower, not participating in the rest of the semis. And trapped in a downtrend. That's kind of a megaphone downtrend. Like a corrective thing. Lows, lows. Almost broke out. Low, low. It's a megaphone thing. That's a corrective. And usually these break and go down bigger before they come back up through. And then CCI looks pretty garbage. Yeah, SOXL, like I said, I sold this one. This one had bigger potential, but I went ahead and liquidated on the near miss of the target at 25. Probably going to retrace maybe back to the breakout point down here around 19, 18, 15, 19 before it can get the next extension higher. F is still sitting in the squeeze. My lines, I need to click save when I update these. Still in this consolidating wedge thing, probably going sideways. Nothing there. Nothing to do. Nothing to see. Until it starts making higher highs, which would be above, at this point, Gotta see something up like 1350 for Ford. You know why? Yeah, Goose, be careful, dude. This can make a lower low. Could hold on here. I would not be a buyer until it's back above 20. But that's a garbage chart, potentially going lower. I mean, look. What do you see? It's not just a now problem. That's a long-term problem. That it did not make a higher high after COVID, and has continued to come down. Probably going to make some extensions. Yeah, this thing looking kind of dangerous. Danger close, as they say. Held on to it right there. Probably going to get extension, maybe as low as 7. It did do a split in here. 1 for 4. Reverse split's not ever positive. That doesn't look awesome. Not awesome. All right, what else we got? Apple. Do some fan favorites here. This one breaking out potentially. This one likely to run for another week. Maybe get up here to the all-time high, and then after WWDC, Worldwide Developers Conference, as that gets started next week, probably see a little pullback on Apple. Tends to run into WWDC on all the hype and the excitement, and they're going to announce they're going to announce that your iPhone can now make coffee and deliver Starbucks just by pushing the button, and it instantly materializes in front of you, and then it doesn't happen, and they pull back. So just be careful. That one's probably going to rally into Friday-ish and then pull back. All right, Meta potentially breaking out into the run higher. Got the resistance up there at 320. I would wait for any kind of pullback to chase this one at this point. That's an extended trade, looking for a pullback to happen, and this orange zone comes from this big gap down back here in January, February 2022, like a year and a half ago. And then Netflix, kind of the same situation, has a big gap down, and we're coming up. Look at that, bounced right off the 1272. Retrace, probably find support at the prior high at 378, and then extend up to about 436, and then get another pullback, and then extend on up. Classic price action. All right. Any more requests? Light crowd today. Light crowd. Maybe I went too much into all the other crap before I get started. Well, it's 5:51. Remember, I go live tomorrow morning at about between 9:10 and 9:15, somewhere in there. Talk about what's moving for the day. See if we play Let's Make a Deal tomorrow on the debt ceiling debate. I don't know. Looking kind of iffy today. Could get a pop on the deal and then a drop, because they're going to have to buy, or Treasury's going to have to refund itself, and they're probably going to be selling like $50 billion in Treasury bills every week until they raise about $1.2 trillion worth of money. So be careful out there, all right? Be careful, be careful, be careful. And, of course, the Republicans may not play Let's Make a Deal. We may just default on stuff, which could blow up things that have used treasuries as collateral if the Treasury decides not to pay those collateral bills. If they defer, be unprecedented, and some crazy shiz could go down. We could see things getting liquidated. Margin calls on brokerage, not just brokerage, but clearing firms. Could see margin calls on clearing firms. So some chaos could happen if they don't play Let's Make a Deal, and the U.S. actually defaults on treasuries. So be careful. That's $212 trillion. Everybody talks about the $31 trillion in debt ceiling. That's laughable. I mean, if you look at the unfunded liabilities, the things that we've committed to paying, the fact that we robbed the Social Security and the Medicare and all the other general accounts, and went on a spending spree. There's $212 trillion of debt the U.S. has racked up. This is, bumping it up by $4 trillion, whatever. That's laughable. I mean, really, our debt is $212 trillion. This house of cards. So, sooner or later, we're going to default. I mean, it doesn't matter how many times we raise it. We could raise it to 212 trillion. We're still going to default because then they're going to spend all that more money, and then we'll have 400, whatever that is, 448, 424 trillion dollars of debt, and then we don't have the money. So, anyway, the moral hazard. Come watch me in the morning. Make sure you're subscribed. Hit the subscribe button. Hit the bell with the notifications so that hopefully YouTube will let you know that I'm going live. If you're in Discord, you can chat with me, ask me questions. And if you want to get in Discord so you actually get notified by me when I'm going live, links in the description. It's like $5 for 3 months. I think there's an extra 12-month upgrade for another so many dollars. Anyway, thanks as always. Appreciate it. Couldn't do it without y'all. And we'll see you in the morning. Bye for now.